Okay, hi guys, everyone's watching this video. I'm making this video because I was told about this investment fund for Devon Real. It's a decentralized hedge fund that deals with cryptocurrencies, which I think is a complete scam, and I will explain to you why I think you should not invest in Devon Real. And just so you know where I'm coming from, I actually invested in another hedge fund. It must have been December last year, and that turned out to be a Ponzi scheme. I lost all my money, so I'm not very happy to see people do the same thing, and I'm trying to warn others. And without further ado, let's get straight into it. It's not very structured because it's already late over here, but I try to make everything as easy as to understand as possible. Although I will not literally explain everything I'm saying. If there is some terminology with cryptocurrency you're not familiar, you could just look it up yourself. Don't have to sell. I'm not here to sell you on anything, so feel free to take anything with a grain of salt. All right, here we go. So this is the Devon Real website. And the first thing that struck me over here is that you see this kind of a powered by ticker. And one of the things that show up here is powered by quantum computing. Let's see. Yeah, there we are. Powered by quantum computing. Now this is interesting because quantum computing does not even exist yet, but whatever. Let's keep going here. Then the next thing I looked at was his Twitter account, which is over here. And when you scroll down, you see some really spammy behavior that I would not accept. I would not think that someone running a 100 million US dollar hedge fund is spamming people about his $500 a week vlog. And you can scroll down and see there's really a lot of those. So that's already sounds a little bit weird. And that's fairly recent. That's just a few days ago. So then I clicked over to the article, which is kind of a rant. I can see his face again. So it is him. It's his account. The only thing that I really took away from the whole article that are interesting for making a point for why I think you should not invest is that he says somewhere here, oh yeah, here you go, that he was a successful marketer in SEO company. So that's this background, at least that's what he says to us here. Actually, I found out through some searching in Google that his background is in modeling and he ran a tattoo studio, but I don't know if that's the same Devon. Maybe there's two, hard to tell. Anyways, so let's just remember that he said here that he is a successful marketer. Okay, and then also, essentially the whole thing is about how he's broke and then he found cryptocurrency and now he has a vision. But there's also one line here that goes something like, he started to grab every small opportunity that he saw. And he also makes fun about Ponzi scheme somewhere here and admitted that he was falling victim to one. It seems like, or he looked at this one FutureNet club. I didn't look at that one. I guess it's a Ponzi scheme and he decided it's not worth his time, or maybe he lost some money, whatever. But going back to what he said over here, that he has a background in SEO and a marketing company, actually that kind of matches what I found on his terms of service, which if you, on his own website, if you scroll down, you will find refund policies for this seems to be policies about a online course on how to do real estate investing or flipping or marketing. Because if you read somewhere here, I found, what was it? Here you go. That one. Sorry, I'm already tired. But here, so essentially, it's about something with residences and commercial buildings. By the way, also, if you want to call this guy, he has a phone number here. I didn't test it. I'm not sure if that's working, but I don't know. I guess you can try. And the whole website essentially doesn't really say much other than the terms of service talk about this older product, which is not found anymore on the website. And then it's essentially just a splash page. Okay, but what I also found out, it's mentioned that the website is published and offered by Devon Real LLC. Let's see, where did I find that again? Somewhere here. Anyways, I tried to find, yeah, here. I tried to find this company in Google. Did not exist. There's a Devon Real property company that would match the theory that he had real estate products before. But there's no Devon Real LLC as it's spelled right here, so that's a little bit sketchy. Also, when I tried to find the address using whois for his domain, devonreal.com, you can see that he is masked that with Contact Privacy Incorporated, which, I don't know, many people do that to avoid spam, which I can accept, but it's not a green light, right? It's not helpful to know that he's hiding his identity on his domain ownership. But let's move on. The really interesting stuff is on his Facebook, because actually the first thing I seen that is that there's just no he got into Bitcoin and cryptocurrency fairly recently. So this post here was September 29. And this is something completely unrelated to Bitcoin. And if you go down here, there's nothing about blockchain at all. And then there's, I think, October 2nd, suddenly he starts to talk about blockchain. And then he starts to talk about it all the time, about constantly. Everything will have hashtag Bitcoin or hashtag blockchain. But the most interesting here is a video that he posted, because I found out there's some clues. As to why I just would not trust this guy with any money. Okay, so here we have, well, we don't. Here we should have his video. I'm not going to play the whole video because, frankly, you can just watch it yourself. I'm just going to point out what I found. Some of these might seem subtle at first, but then it all adds up over time. The more subtle things you find that are kind of weird, it is off-putting. And to me personally, if I find enough red flags, I will decide not to invest in anything. So the first thing I found here is at the 2 minutes and 50, he uses the term API relay. And I've heard them use that term in other videos too. And what he's referring to is how they connect with the exchange to execute the trades, which is through their API, but not an API relay. That's not really a term that I've ever heard or read before. And I tried to look it up on the internet, and no one is using the term API relay. So it goes to say that he probably does not have a highly technical background, even though he claims to have 9 years experience in machine learning, which we'll get to later. So we'll find somewhere here around the 250 mark.
You know what, I'm just going to start covering it. First question I get asked all the time. When people are coming on board with me, you don't need to give me your money. Ever. Ever, ever, ever. That is, first and foremost, the biggest difference. We use API relays to trade on your behalf.
Okay, there you go. They use API relays. Anyways, okay, moving on to the next thing. This is fairly, this is similar. This is also like a technical faux pas in his usage of the language, but I think this one is far more severe. At around 3:20, so just in a few seconds from now, he will say that to buy Bitcoin, you have to go to an exchange like Coinbase, which is correct. And then he refers to those exchanges as hardware wallets, which is just frankly completely incorrect. I mean, Coinbase, it's an online provider, and if you buy coins with them, the coins will be stored in their own Coinbase wallet, but it's not in your own hardware wallet. Let's see if I can find that.
No, we simply just stop the relationship. We keep doing well together. Value on trust. You're trusting me to trade well for you. I'm trusting you're going to pay me. If you don't, we simply just stop the relationship. We keep doing well together. Now, when you put your money into an exchange account, okay, first off, you have to open up a Coinbase wallet, a blockchain wallet, any of those hardware wallets.
Coinbase wallet, blockchain wallets, any of those hardware wallets. Okay. Then I'm not going to play this one, but then in a few seconds, he'll also explain that an exchange is essentially every other coin. I don't know. That seems not very accurate to me, a way to describe it. Okay, then the next thing that's kind of more interesting if you're into the psychology of it, like if you watch Lie to Me or some other show that deals with micro expressions. I'm not totally sure on that. I'm no expert, but I did find a pattern in this particular video where Devon will readjust his seat once in the beginning, but then afterwards he will readjust his seat only at certain points where I think he's lying. like I'm just doing right now, which I'm not lying, of course. But anyways, at around 5:30, he says that he makes a joke that people who think a certain way would be people that operate a Ponzi scheme, and you shouldn't trust those. And then he kind of smirks or smiles, looks to the side, and then he readjusts his seat. That to me is a significant change in his body language from the baseline of the video, where he essentially just leans back a little bit and maybe goes left and right, maybe uses his hands, but he doesn't really readjust his seat all that often. So let's watch it in the video live here.
I believe, and the people that I work with, and everybody in this community strongly believe in Bitcoin. Bitcoin has some severe problems that need to be fixed. Okay, no one's going to deny that, unless they're running a Ponzi scheme or they're alive, which you shouldn't be involved with people like that, anyways. But all of these forks you're here.
There you go. It's hard to miss at first, but then once you see it again, he does that another time. It is a little off-putting to me personally. So let's just get back into the next time he does that, where he says that they use 129 technical indicators, which I don't know. If that's realistic, I don't know. I couldn't look at 129 lines and see something in all of that. I mean, my whole screen would just be covered black. But let's see how we readjust this seat with that particular statement too.
Different indicators that we use when most people look at maybe 10.
There you go, readjust again. Or actually, I'm not, yeah, anyways, okay. The next big thing that he says is that he has this strong belief that USDT, which is a cryptocurrency that's supposed to be tethered to the US dollar, is extremely safe. And he says that a few times in a few calls, in a few videos. The first time I've seen it was somewhere around here.
Is avoid all these agendas, and we stay within USDT. Now, USDT is the safest bet you have on any exchange. Why? Because it's tied to the US dollar and backed dollar for dollar. If you try to hold your Bitcoin when Bitcoin's going up and going down.
Okay, so it seems like you think that it's dollar for dollar, which that's what the people are saying it is, but we don't necessarily know it is. And Tether has been a lot of bad press. The people that run this cryptocurrency are known fraudsters. And if you think that you could get $1 for every Tether you own or hold, you can just look up the terms of service of Tether. This is not rocket science. It says right here that they do not guarantee any right of redemption or exchange of Tethers by us for money. So the idea that you can just run to Tether and then get $1 for your Tether token is bogus. So that makes it the same way that paper money isn't backed by anything. Tether is also not really backed by anything, because even if it is backed by US dollar, if you can't get it, then what's that worth? Plus, they have a lot of transparency issues and just recently been hacked. So I wouldn't trust USDT too much. And I know that people in the cryptocurrency community don't believe in USDT that much either. The next big thing that I want to talk about, that I see Devon doing constantly, is that he will talk about how it's decentralized. And his claim is that because he does not own any money of yours that he's trading with, it's therefore decentralized. But I just feel that's a completely wrong way of looking at it, because even though he does not own the money, he controls it. He knows. He executes the trade. So he is literally moving the money around. And there's only one guy doing that. So how is that not centralized? One guy is moving around all the money. And we also keep saying to you that in the videos that he's not able to withdraw any of the money, which is technically correct. He can't use the API keys to send the Bitcoin straight to his own wallet. But what he can do is move the markets around and exit there this way. He can do an accidental bad trade on your account, and then on his account on the other end, he will be the one to receive the gain of that trade that you paid for. So even though he cannot withdraw the coins directly, there is an exit strategy for him that's possible. So let's watch that. Also, he keeps saying that It's all based on trust because you have to pay him. And of course, you want to keep the relationship going. Note again how he's readjusting his seat. Just at when he says that he wants to keep the relationship going. At around somewhere here.
You guys, and every week I do well by you, do well by me. Keep that relationship going. Now, how risky is it trading BTC against?
Okay, there you go. He adjusted it again. Okay, right there, he will also say that BTC, Bitcoin, is an altcoin, which I'm not sure you can give him that can be considered personal opinion because no one else has that opinion, really. But far more interesting I found is that at the 11th minute, he makes an excuse as to why he can't answer your questions on the spot because this was a Facebook live feed, so the questions popped up immediately. And yeah, let's just watch at what he says for that.
You guys can start asking questions on here too, so I can take this and note for the next video. I'm never going to answer your questions right away, just because it takes time to look into it and understand from your perspective what you're asking. Okay, a lot of people have the same question.
Okay, so this is all like a lot like, okay, I can't answer because I need perspective, blah blah blah. I think he cannot answer because he doesn't know, or he's too afraid that he might trip over his words, as he actually did a few times already, and it would just show that he's not an authority on this topic. Then again, just after that, he will say how USDT has the same risk as the US dollar, which is apparently no risk.
Whatnot, or maybe you love it. Maybe you trade with it every single day, but you should know that USDT is the safest cryptocurrency available, hands down, over Bitcoin, because it is only subject to the tether to the US dollar. So until we decide the world's not going to run on the US dollar, that we're going to stop using it, USDT will be your safest haven. When things go awry, you need to jump into USDT. But if you're already in USDT and things go bad,
Okay, so I think I already established how USDT is not the same as the dollar and you can't get any dollars out of it. Another thing in this video, and this is the last thing about this particular one Facebook video I found, is that he explains a lot of times the concept of shorting the Bitcoin using USDT, which is a valid thing to do. But the way that he explains it over here, it doesn't really make sense to me, because the way that he will explain it in just a minute when I show you is that he thinks that the price of the Bitcoin is just dropping, and it's dropping without any trades happening. It's just dropping on its own, and it's dropping so fast that you cannot get a sell order in to exit your position before you would lose all your money. Which also doesn't really make sense, because if there's a crash happening, if the price is moving, the price on the exchange is always created by supply and demand. So if there's no trade happening, there is no price. The price that will be shown will be the price that happened of the last trade that was executed. So the idea that the price can somehow move down while at the same time there's no selling going on, that no transactions are carried out, I mean, where would the price movement come from then? So it doesn't really add up. And I mean, what does make sense is that he's saying that if the price crashes very quickly and you are greedy and want to get the most USDT or whatever currency it is for your Bitcoin, that you might be too slow in entering the number and the price might fall steeper. But you can always just add in a safety margin for that. Okay, let's watch him explain that same thing.
So we work in high volume markets because you're able to move those funds around much faster. Orders get placed, orders get put up. Yes, Gail, I can send you the link after this. I will make sure you're taken care of. Volume, straightforward. I think everybody understands that, but it's the number of coins being traded on the entire market during a given period. Okay?
Okay, and the next thing I want to look at is something he posted on his Facebook a while ago, which is some kind of a document or paper. And it's just not very up to date. I don't know if he wrote this or not, of course. But it says somewhere right here, yeah, right there at the bottom. Okay, seems like I can't zoom in on this one. It says that in if you mine a block, you'll get 25 Bitcoins. That used to be correct. Now it's only 12.5. The Bitcoin mining reward halved quite a while ago. But anyway, so that's not very, yeah. And then also the other stuff here, the same again, the USDT is talking about how that's very secure and redeemable for US dollars, and it's just not the case. But let's move on to the next video. So this is some kind of a phone call that was being recorded with another investor, it seems like. I only have a few things in this, but in this video, if you really pay attention, you can kind of tell the whole thing's a Ponzi scheme because he somewhat admits to it. Even though he tries to hide it with clever technical words and explaining everything in more words than is needed. Interestingly enough here, the first thing that he says is how they use IBM Watson and his background in machine learning, which doesn't add up with the background of his terms of service, which on the website that implied a real estate thing, or the SEO, or the marketing stuff, or the tattoo, or the modeling that I found in Google and other sources like MySpace. So, sounds like a fraud to me. Let's see it here, right here. Okay, so there you go. It's IBM Watson, but now it says that instead of looking at the stock trading directly, they look at social trends, which somewhat would make sense with the marketing background that he has claimed to have on his Steem article, but it does not add up with the other Facebook video talking about 129 technical indicators, because if you look at 129 technical indicators, there's not really a social I mean, at least from my understanding in this video, he talks about like stuff like Facebook mentions and Twitter posts and TV and radio and songs and whatnot, and not technical indicators on a Bitcoin chart. Later on, he will explain how they of course use some technical analysis and fundamental analysis manually to some degree, but 129 indicators does not sound like to some degree to me. That sounds extremely complicated already. Then the next thing is that he says that they also have Snapchat as a data source for the social analytics. That I'm just a little bit curious how they do it, because Snapchat is supposed to be private. I mean, how can this one guy read other people's Snapchats? Even if it's not private chats, even the story, it's pretty hard to analyze stuff on video. But anyways, I'll let you listen to it. Even Snapchat. All right. Now it's getting extremely interesting, because now he makes the point that since his operation is decentralized, quote unquote, the clients are executing trades not at the same time, but everyone is executing trades at different times and different prices, so that it is possible. And apparently the fund is so large that they kind of like don't even control it anymore, which doesn't make the whole thing seem more trustworthy. Like, even just because you have a lot of money, you would want a person that you hire to earn you more money to have extreme control over that and know exactly what price point they're doing, and not the whole phone call is kind of like, oh, the market is so small, we are such a big whale, we cannot even control it anymore. Anyways, his point is that sometimes they will have one buyer buy in first low, then sell a little bit higher to his next client B, and so on and so forth. And that's exactly what a Ponzi scheme or a pump and dump is. You get people to buy at predefined prices that go up over time. And of course, you can see how this is not sustainable in the long run, because eventually you will not find any person to sell to anymore. So he admits to doing that somewhere here.
they're getting out earlier because they can trade at a profit. So I'm an invisible whale on the market. Everybody thinks that these are different people, different bots reacting. But really, I'm getting right in the middle and creating the liquidity in the market. I'm part of the liquidity.
So he talks a lot about liquidity and being a liquidity provider, but he essentially admitted that his clients are buying, trading amongst each other. And then when the investor presses and asks some questions, how that can work out in the long term, he kind of answers something in the way of, well, if people keep investing with us, then it will continue to work, which is also exactly what happens with the Ponzi scheme, somewhere around here.
For that kind of trade behavior to be profitable for both parties long term.
As long as there's other people in the market, there will always be room for this to be profitable. Why? Because people's behavior will be continuous. Since the day the stock market opened, there's people that still trade like it's the first day of the stock market. So it will never be an issue. The more people that get in, the better it is for us because we become.
The more people that get in, the better it is for us. Of course, he's talking about the market size, but it also applies exactly to how this fund works. And given that his social media is going to grow and he talks about psychology, of course, people will fall for this kind of scam. And therefore, that's his reasoning. And then there's another mention of something similar right here.
Become more and more invisible, and the markets become more volume. And having more sales and buys that can happen in the market is perfect. And it's actually a win-win, then aside from my clients, because if somebody's selling who got in earlier than another one of my clients.
If somebody's selling, we bought in earlier with another of my clients. Well, there you go. Another thing that's kind of confusing is that he said that while this phone call happened, they closed $75 million in funding, which also raises the question to me, if that's true, why are they even still looking for more money? If those returns are real, like with 75 million in a few months, they will have pretty much the whole market cap that there is. Like, what's the point of getting another measly 20 grand? And then of those $20,000, why would he want like $500 upfront for a server, but then not recurring? Because server costs are always recurring. It's never a one-off. You have electricity, networking, maintenance, stuff breaks down. You have to look after it. So I don't really understand that either. Okay, but here let's listen first to how they closed so much money while during the phone call. Okay, wait.
So I mentioned that he said he thinks it was somewhere around 15 to 20 million in terms of fund size to date.
Actually, we just closed $67 million in the last 5 years.
So
In the last 5 minutes. Okay. Interestingly enough, also the investor here talks about Andrew, which seems to be a friend of Devon. But then in another material that I got was a recorded phone call. Andrew admits that he only knows Devon for 2 weeks. So, and it seems like Andrew is a referral too. So I guess he makes a commission on the investment, or perhaps he's kind of trying to just pull more people in. At least that's my guess. Then the next thing is the idea that Devon kind of says that they could never saturate the market.
Out if they are no longer going to be profitable, if they do fall within the range of people are buying or selling them. So yeah, like, there's too many variables that your life drops to $900 million when I get there, that I could never be saturating the market.
So that's
I don't know. Never saturate the market. Okay, the next thing is that he says that he has 2 analysts that are in different places and they're looking for a third one, even though you never hear any of those analysts talk, mention, speak on photos or anything. He wants to make the operation look bigger than it actually is by doing that. And I think that he is just copying another guy with this strategy, with this, the guy behind Bitcoin Fund Manager. he keeps talking about his 5 top analysts, and they're all in different places so that they're awake 24/7. But I'm not going into that so far. This video is about Devon Real, not some, I don't even know what that guy's name is anyways. But he will say that they have the 2 analysts, and I'm just wondering if they have this super great AI with quantum computing and IBM Watson, and they're looking at social trends, why do they still need analysts even?
And when I say we, I have an analyst from Australia and an analyst in New York. We're looking at another one in Barcelona right now because the market's 20%.
Okay. Last thing of this video is that he again will say API relay at 26:35, but I'm not going to show you. I think it might be a little bit boring by now. Okay, moving on to the next video. He again talks about his decentralized hedge fund in this phone interview with John McAfee, and I forgot to mention this one. You can see in the intro that he's showing flashy cars and expensive stuff, and in his Facebook it also seems to be like he's reposting some photos from some other Instagram with champagne, and then they've been partying in somewhere. It's also a typical sign. I try to look professional and not look professional, look successful to lure in more money. I'm not sure if this is the right video or if it's another one. But the point I'm going to is that Devon makes the point, and I think he's just trying to leverage people that don't really understand blockchain. He thinks that blockchain will bring trust to the people, that with the blockchain you can trust one in each other, which is not really what the blockchain is about. The blockchain is about establishing trust by eliminating trust. So the idea is that you don't have to trust anybody. You don't have to trust your bank, your government, the US dollar, any currency, any computer, any network, nothing, because you have the complete power to verify everything yourself. You can go on the blockchain. You can get your trusty calculator if you're really inclined to do so. But your wallet, your computer will do it just as fine too. And it will verify that the Bitcoin is real, that it's not forged, not stolen, not double spended. And that's the whole idea. You don't have to trust the guy giving you the money that the US dollar bill is real and not forged, that it's not stolen, because Bitcoin, you don't have to trust it. But the way that the Devon presents this is that somehow this system establishes trust among people themselves. And therefore, if you go into a business agreement with him, the trust should be shared equally among both participants. And therefore, his success fee is 50%. We get into that a little bit later. Let's see if I can find it again.
I'm not putting any money into anything. I've never said this on anybody else's venture. Yeah. I did mine. My client, who I invest in the market, the reason being, you are building an ecosystem on top of that. When I invest into art, I'm looking at who's also investing in art before we make larger grabs at what the community wants to do. I want to come back to my client and say, hey, let's not look at what you got doing here. This is what's going on. We help you with the ship. We're making art more valuable, less efficient. So that's what I'm doing. I'm trying to leave a legacy. So I'm not really interested in working with anybody. I'm not putting any money into anything. You're better actually building a structure where we can all trust one another again on the blockchain. I'm not really interested in working with anybody.
Yeah, we can trust everyone again. Okay, let's see if that will happen. And last piece here for this video, the phone call, which the first thing I want to show you is how Andrew tells how he only met Devon 2 weeks ago and seems to be kind of a behind the scenes guy by now, kind of into the whole operation. I'm not sure to what degree.
on more than 3 grand worth of personal. So I agree to allow me to help bring more investors to the fund so I can build my Bitcoin balance so that I can have my own account. So that's what it's doing.
Because I am doing the math. And I'm using
Level equivalent of life. Here's what we expect it to be. That it will be what we expect it to be, which is why we do this today. With every moment. 3 grand worth of personal. I'm not currently sitting on actual trust or 16 trust. Yeah. Actual trust is worth way more than any left in the world. Because actual trust is 16 every amount of money in the world.
Do you have money and do you have an account with Devon?
I met Devon less than 2 weeks ago.
I met Devon less than 2 weeks ago. Okay, and so now he's working with him to get new clients and earn commissions. That's what it seems like. The next thing to point out is that, so this, if you're not familiar, this other guy on the phone with the good audio quality that's making the recording has been supposedly some kind of an expert in cryptocurrencies. But I just want to point out real quick that his math is completely screwed up here. Let's see.
And I'm using a low ball figure of having 100% each month, which is basically 3.33% per day. That's
Okay, so for what I mean, 100% a month is ridiculous amounts return, but he says that it would be 3.33% a day. That does not take into account compounding. Actually, if you just calculate it here in a trusty Google Chrome, 3.33%, as you said, per month would not be 100%, would be more 260, what is it, 267%. So I don't know. Would you trust a guy if he can't if he can't properly compound interest? Good question. And then the last thing that kind of sounds weird, like just blabbering around, is that the blockchain quantifies trust.
I believe I have, but I don't.
For me, I was curious because, speak about my understanding, maybe what I have to say resonates with somebody who's going to be listening to this recording in the future, or whoever it may be. And that's a fundamental point. The trust is now technological. Blockchain does a far better job as an entity and a wide application to quantify trust than money does.
I don't know. To me, that sounds like a lot of blabbering. Blockchain is also not an entity. That's just a technology that can be used. But anyways, I'm going to wrap this up in a bit. All right, this is the last part of the video series where I'm going to share what my theory is of what this whole thing is. I think this is a guy that is looking to get rich quick. I think that makes sense. I mean, that shows because you can see his flashy cars in the intro and the kind of the player lifestyle, or whatever you want to call it, in Vegas with the champagne bottles on his Facebook or whatever. And I think in order for him to get rich, he invented a Ponzi scheme. Very, very stereotypical Ponzi scheme, where it is you get people in the Ponzi scheme, and then you get more people and more people and more people, and you claim you have some secret investing mechanism by which you can make insane returns. In this case, it's 100% a month, which is completely ridiculous. And then eventually the whole thing collapses if there's a lack of new capital. And I think I think it's not too stupid, because the way, if you look at it, they say they are planning to make 100% return per month in trading, but then you have to pay a 50% fee. So if you don't really think about it in your mind, what you will think is that this is some kind of superior trading style that actually makes 100% returns. But it doesn't. It only makes 50% returns, because you don't know what's going to happen with the 50% that you pay to him. My bet is that he will use the money, the fee that you pay for him. He will not all put that in his pocket. He will use a lot of that to keep the scam going, to artificially pump coins up in price value so that you will have some kind of return. Plus also the entrance fee, the minimum requirement that is needed to invest in the fund is increasing over time. So that means that every investor will have to put in more capital than the last one. So that way they're probably trying to kind of control the ever-growing need for new money coming in, but eventually it's just going to crash. It seems to me this guy has no clue about cryptocurrency. This guy has no clue about the technology behind it. And he certainly does not seem to have a 9-year career in machine learning. And I mean, you can see on his own website how that doesn't really add up, because he says he's a marketer, SEO, he's broke at the same time, yet he's successful. And I don't know. Oh, one last thing. On his YouTube videos, you will see that he uses this super spammy way that is actually not used anymore, of adding hundreds of tags in hopes to get the SEO up. I don't know if that still works. I'm not an SEO expert, but he claims to be an SEO expert. So I think this stuff does not work anymore. But anyways, I would not recommend you invest with this thing, at least not without putting a lot of research into it, because I do think it's a scam. 100% returns per month, or 50% returns per month, which it actually is unreal. And even if it were real, why would he even ask for your 25 grand if he already has $100 million? What's that worth to him? If he has $100 million and he makes 50% a month, let's just say for 1 year, and it compounds, of course, and that will equate to $80 million in trading profit. I mean, that's already quite a lot. So I don't know what's it worth to get another 25 grand. Other than the $100 million are not real. His fund is very small. It's only based on small people. That whole 100 million stuff is completely ridiculous and the money does not exist. Which he has made no proof that he has any investment other than some screenshots or friends telling something. And even then, I haven't really seen any kind of number. So stay away, guys. It's a scam.